Welcome. A Florida lawyer at the forefront of legal challenges against foreclosure practices by mortgage lenders says the U.S. housing morass will drag on due to difficulty in determining who owns home loans. This is according to an article in Reuters. My guest is that Florida lawyer. He is Tom Ice, partner at Ice Legal in Royal Palm Beach, Florida. Tom, welcome.
Thank you. Thank you for inviting me.
It says that you're at the forefront here. How did you get at the forefront of this?
Well, I want to make sure everyone knows it's not, we're not leading the pack. There's lots of other folks who are joined in this, and we're essential to bringing this all to the public's attention. It did so happen that I would say the three main depositions that have come to light about the robo-signers, and the first one being that of Jeffrey Stevens, which was GMAC or Ally, were taken by our firm in cases that were filed here in Palm Beach.
Okay.
So in some ways, a lot of the roads lead back to us because those depositions have made the rounds and have caught the attention of the press and of the general public.
And let's just see if I'm being accurate here. What we're talking about here is the practice of lenders securitizing home loans, which led to this economic collapse in a lot of ways. Now with the increasing foreclosure rate, the problem has been is that because these loans are now securitized, the banks are now servicing them, and the paperwork is really hard to find, yet these foreclosures continue to accelerate. And that sounds like a huge problem that has no end in sight.
And that's where the so-called robo-signers come in, because they're designed to kind of skirt around the issue and get summary judgment, which really is just a shortcut. I like to think of it as it's trial by affidavit rather than real evidence. You can't cross-examine an affidavit. So they, just sign off on these without reading them. And, one of the things they say in there under oath is that they are reading them and looking at the documentation. So at the very minimum, it's perjury in the sense of they are under oath saying that they looked at things and they're not. But you hit the nail on the head that the real problem is not so much that procedural issue, although it's serious and illegal. The real problem is that every single one of those affidavits says that the plaintiff in the case is the owner and holder of the note. And it's laughable, really, that the banks are saying now that they're going to check all of these affidavits in a matter of 2 weeks, which it took years of signing without looking at anything, and now they're going to look at them all in 2 weeks and with looking at something and somehow determine that it's correct. Leaving aside, that's sort of like asking Richard Nixon to look at the Watergate tapes himself and then tell us if there's anything bad on there.
Right.
But the trying to find the ownership is the problem. Like you said, the servicers, who are the ones that are conducting the litigation, they don't know who the owner is. They're operating off of computers that may have a name on there that says who the owner of the note, who they're forwarding the money to anyway. And if all they're going to do is in the next 2 weeks is check to see if that name matches the affidavit, well, they're wasting our time, because that's how the names got into the affidavit to begin with. Somebody just pressed the button, and the computers, who are the ones really testifying against my client, all that information just pours into the affidavit that the robo-signer then signs. The problem is there's nothing behind that name in the computer. There's no proof that note ever got to the person who's now claiming, or the entity that's now claiming to be the owner.
So, and to clarify too, a robo-signer is a person who just sits there and signs foreclosures, maybe 1,000 or 2,000 a day, who really doesn't read anything on them.
Yeah, I don't know who coined the term. It's very apt and descriptive, but what they're signing is the affidavits to get the summary judgment, like I said, so they can get the shortcut rather than actually go to trial. They're also signing assignments, often to their own client. That's a part of where they're really manufacturing evidence, in my view. that in one of the things they present in the court, and either summary judgment or trial, is the assignment that assigns the mortgage from usually MERS to their own client. In doing so, they often pose as a MERS officer. Mm-hmm. So they will be signing as vice president of MERS, transferring the mortgage from MERS to their own client. And maybe should go into a little bit about what MERS is, because MERS plays a huge role in the problem that we're dealing with now.
The mortgage electronic registration system is what you're referring to?
Yes, that's exactly it. That's an organization that was created by and for the banks, specifically to hold mortgages while the notes travel separately from Bank A to Bank B, Bank C, et cetera. The purpose being that in the old days, the mortgage literally followed the note. They would go together whenever there was a transfer. There weren't that many transfers because they weren't securitizing back then. But what they found when they started doing the securitization, every time that you do a transfer, you're supposed to record an assignment of that transfer in the public records. The purpose being anyone can go down to the public records and look to see who owns the loan. Mm-hmm. By having MERS hold the mortgage, it sort of anchors it there while the note travels around, and they never have to assign the mortgage because the mortgage is still with MERS. And meanwhile, MERS is tracking in its computers who the servicers or the banks who are trading the notes say who owns the note. Mm-hmm. So it becomes a replacement for the public records, such that, and it obscures for the general public that they can't go down to the public records and see who owns the note. Only MERS has that information. Mm-hmm. And it's a problem because MERS is not giving the public really access to those records.
And if anyone out there listening or watching has a mortgage and you've had one over the last 10 years during the boom and then the bust, so to speak, when there was a lot of refinancing going on, you would typically, in maybe a 3-year period, even if you did nothing to your loan, you might have 2 or 3 banks telling you that now they own your loan. And I know that process has slowed down. One would think that because this is so important and securitization seems like a highly complex process, that there would be some simple way for them to keep track of all this.